You've seen the videos of people online making thousands from day trading. And you've also seen kids on TikTok as young as 18 making your whole yearly salary in a week. And now you've decided to test out day trading. Let me tell you why that's not a good idea. Hey guys, welcome back to the channel. My name is Fyzee. On this channel, we look at finance and investing. And today we're exploring why most day traders fail. Number one, lack of knowledge. So chances are that if you've never actually done any day trading before and you're just getting into it because you saw a few videos online and they have made it somehow look very easy, quite frankly, you're in for a surprise because this is by no means an easy task, and don't be lured in by seeing those quick and easy profits. Now, generally speaking, we would expect the stock market to behave rationally. After all, we as humans like to think that we're rational human beings. However, if anyone has actually been observing the stock market long enough, they will know that that is sometimes just not the case, and things can get irrational very quickly, and a lack of knowledge about all of this can result in huge losses. The other thing could be that you're only joining the stock market because you saw some article in the news saying that if you invested $1,000 into Tesla 10 years ago, you would have about 150k and stuff like that. And things like this bring in something called FOMO, which is fear of missing out. Your decision to step into this dangerous but lucrative world of day trading is based on emotions alone, and those emotions could be greed or fear and a whole bunch of other stuff, and your decision might not be based on proper research or knowledge, and we'll talk about emotions in just a second. So looking more into lack of knowledge, when day trading you need to understand that you'll need to be using a lot of indicators, and you need to know how to do technical analysis and read a chart and have good money management. Plus, one of the most important things that you need to understand is good risk management, having the correct position sizes, knowing when to use stop losses, plus so many other things. And if the only reason you're jumping into this is because of the stuff that I said previously, then I've got some bad news. Now guys, a huge point that I want to make that I feel like a lot of people don't actually consider when it comes to day trading is the fact that if you have the money to trade, chances are you might be working a 9-to-5 corporate job, or you might have some sort of steady income coming through. So then you need to think about what you value more. Do you value being productive at work and doing your job properly and doing it up to the standards? Or do you spend your time looking at stocks, monitoring positions, looking at charts and so on, and trading effectively? Because the thing is, you will need to make this choice, and you can't work productively and trade effectively at the same time. It's got to be one or the other, otherwise you risk being horrible at both. Now, I'm speaking from experience because I used to do this back in the days. I would work and then I would day trade at the same time, and I'm going to tell you that once you do a bad trade and you lose some substantial amount of money, your mood and your mindset is going to be upset for the whole day or a whole week or a month, depending on how bad it is, and that's going to lead you to be less productive at work, which can spiral down to other negative stuff as well. Now, of course, this is just my personal experience, but let me know if you disagree. Speaking of being upset, let's talk about emotions, and the two main ones being fear and greed. Now, I just want to say that this plagues every single person that enters the market, not just the retail investors like you and me, but the big institutional investors as well, because at the end of the day, we're all human. Now, a lot of the times people will just day trade based on greed, and they might not have a lot of money to begin with, and after getting hyped up by seeing some stock double or triple in just a short amount of time, they want to join in on the action. So they will bring in their savings and put the money in and hopefully try to replicate this return. And they might even try to use CFDs, which are highly leveraged, which allow them to trade with little money but get the effect of a large trade. And essentially they can magnify their losses or gains to try and make as much money as possible, and this can turn toxic very quickly. Similarly, on the flip side, fear causes people to be quite irrational. For example, if you have a position in a stock and it's gone down in value, you might be tempted to just sell and get your money back because you can visualize your losses right in front of you, and the fear is going to make you lose more money. Now, of course, all of this depends on which company you buy and a whole range of other factors, but you guys get the point. Now, if you guys want to learn more about emotions and how they affect our behavior when it comes to money, there's literally a whole field in economics called behavioral economics that goes into all of the fallacies, biases that make us irrational when it comes to trading and investing, so go check it out. Another interesting concept that I want to talk about is something called random reinforcement, and I can tell you that this has definitely happened to me as well. So as an example of this, if you're new, you might make a series of trades as a beginner and all of them might be successful, which may lead you to think that you have a natural talent for trading and that you have a special sense of intuition that other people don't. Now, although that could be true, what also could be true is the fact that you're getting very, very lucky in those trades. And those trades that you're making could be potentially bad trades. However, since the market is very dynamic, it leads you to think that your success is based on your abilities and your strategies and nothing else. Now, this actually happened to me back in 2018 when I was trading pretty frequently for about 2 months. And in that period, I made about 40 different trades, and every single trade that I made was in the greens. I made a profit every single time, and I didn't make a single dollar of loss, which led me to think that I knew what I was doing and I can just keep doing this and I can just keep it up and I can keep on making this spare cash on the side. But I was so wrong and I paid for it quite dearly. Now, if you guys want to know about some of the mistakes that I've made in the past and the stuff that I've learned so far in my investing journey, there's a link in description for those 2 videos, and they're split into 2 different parts. Part 1 goes into my mistakes and part 2 goes into the lessons, so you guys can get a full understanding of my journey and you can learn some things as well. Now, the final and the last point that I want to make is the fact that as a day trader and as a retail trader, you are basically competing with other firms with very, very large capital, and they have the ability to influence the market on a huge scale, which can ultimately hurt you. Plus, they have a huge army of traders, analysts, and other people who are working to ensure that they always come out on top, and they've got access to information that you might not be able to find in time, since basically you're a one-man team versus a whole empire. So for you as a single person, it's going to be much harder to find it, and it's going to be very slow, which can of course ultimately cost you money. Now, my final thoughts on this are that day trading is very possible for a normal retail trader. However, it requires tremendous amount of skill and control and so many other factors. And if you're just a beginner, chances are that you won't have all those things. Therefore, it is best not to day trade and look at long-term investing. And to help you with that, this video goes into some of the things that you should consider and think about and research before starting to invest. And you can think of this video as like a checklist for investing. And this video goes into some of the mistakes that I've made in the past, so you guys can learn from my stupidity. Thanks for watching, guys. Please like and subscribe, and I'll see you in the next one. Bye now. And to help you guys with that, and to help